All right, folks. This is a very important critique, and I think everyone needs to see this, and that's why we are making this critique video at this point in time. So this was the AUD trade we posted the other day, and we literally called that a long position. And some of you think that money was not made or something because the market did reverse at a particular point in time and all of this. But honestly, what literally happened was that after the FOMC news, I was literally tracking the market bit by bit. I was tracking the market, and I decided to go ahead and analyze this chart and see what's going on right around there. Right now, a lot is going on that I'm going to explain as soon as we start. I'm going to explain. But initially, I saw some moves on there that made me think, okay, let's look for longs and stuff like that. So I'm going to explain why we took longs and how we could have managed it properly, because I know some of us might have tripped off like this. Some of us that took this trade might have tripped off. And the whole reason for critique videos like this is so that you know what to do better next time. You understand? So that you know how to trade better. That's the whole point of it. Take notes in your journal, take notes in your journal, and actually know how to perform better. So let's jump right into this video. Now, in the analysis standpoint, you notice that what literally happened here is that we were quite bullish for a while, and then we flipped bearish. Where we flipped bearish was this area I did explain in some of the videos that we've had in the past. I explained that from this area where we broke this structure right here and we tested it, we flipped bullish and bearish rather. We flipped bearish, guys. Don't get me wrong. So ever since then, we'll be doing this push down, pull up, push down, consolidation, drop, and now we put all the way up. Now the point is, sometimes you can take short-term trades, but if you are not very good at trading counter trends, trading against the trend, I would rather you just stick with the trend. And sometimes it's preferable to stick with the trend, because for this case, I would rather focus more on taking buys if I had seen that we broke above these areas. We broke above this area, like I would take buy as though I'm the market maker myself. If I see that we broke above this area, probably retest and kept going. Okay. This is when I would have been confident with taking buys. Now, when I'm taking buys in this case, while I'm still within this range, and when I mean this range, I mean the top here to this bottom, while I'm within it, I'm cautious of the fact that we are still in a bearish trend for the meantime. Okay, because looking at the daily right now, you see that we've broken the trend line that we have on here, but we are sitting below the moving averages and some other confluences that made me think, okay, this market was going to tank, was going to collapse. And if you want to see the video where I talked about AUD USD dropping all the way from the top here, or even moving from here to the top, this is what I mean. Moving all the way from here, I think down here to the top here, and dropping from here all the way down. You can go check other videos on this channel, and you find that particular video. So guys, I saw the break of the counter trend line as well, of the original trend line, because since we flipped bearish, this became my actual trend line. So we had 0.1 up there, we had 0.2 down here, and this was supposed to be 0.3, of which we actually did touch it and we did react a bit. Now, what was I thinking for me saying let's go long? Because after the FOMC, I was literally looking at this market for a while. I was looking at everything I could get my eyes on, and I noticed that we had a decent bearish engulfing candle right here, which was very decent. Then I was literally expecting the market to continue to the downside, but I was like, okay, let's break out of these levels and then we'll start looking for shorts. Nonetheless, that didn't happen. That did not happen. And then what happened was that we started pulling all the way up. And as soon as we broke these highs, I was like, there are some reasons why we should start looking for um bullish moves. And then I went on a lower time frame and then I looked for bullish patterns and all of that. So let's drop down to a 4-hour time frame and let's analyze, guys. Let's analyze. And we would then talk about what we could have done better after taking this particular trade. Now, on the 4 hours, you notice that this particular bullish move that you see right here, a bearish move, was the large bearish candle, and then what happened immediately? We started pulling all the way up, all the way up. Now, what I noticed from this point in time is that we had a range initially, that the range was then broken. So we had this lower high point right here, and then we had an equal low point somewhere around here. So this was a range that I would have expected. Okay, price would pull back into these levels and keep dropping, that type of thing. But then we put all the way up, creating a higher high in a way. And then instead of continuing to the downside, we did put in what a higher low point. Now breaking this higher high point. So that was exactly why I felt, okay, this is a decent area to start looking for buys for the short term, And that's why if you notice, normally how a trend line is being traded, let me tell you about that, guys. Once I get a breakout of a trend line like this, usually I would love to target significant levels of swings. Honestly, I would love to always target the second touch, if that's, sorry, I think I picked the wrong thing. I did pick the wrong thing. I would love to always target the second touch, okay? The second touch, which is probably this area up here, would have been my target, which means that this target I see here would have been here, okay? That's for the fact that I understand that because we are broken out of the trend line does not mean the trend has changed. For the trend to actually change, I want to see a shift in structure on the daily time frame, which would have been these areas right here, taken out. Okay, but what happened? That didn't happen, guys. That didn't happen. So I was still bent on taking shorts. I was bent on taking short. Nonetheless, my short time buys were important as well. So having a Fibonacci from this low down here to the highs up here, you can see that price literally retraced very close to the 61.8 before we started pulling all the way back up. Now, I wasn't able to catch this move. I wasn't able to catch this move from down here, guys. You might think maybe I caught it from down there. I was not able at all. I was not able to catch the move before the FOMC. And as well, I actually saw this after the FOMC. That was when I was like, okay, let's go long. And then another thing that actually gave me the confidence of going long was that when I saw the risk to reward ratio on this trade, the reason why I'm leaving, the reason why I left every drawing here as it is on the Telegram channel as I posted it initially was because I wanted to explain in critique how we could have done this better. Now, dropping down to my entry time frame, which was around the 30 minutes time frame that I used for entry. I think that was what I was looking at the time. The 30 minutes time frame. Let's drop down, guys. So, on 30 minutes, you see I have a couple of trend lines on here. They were very, very important because now I knew that if the price should break this trend line, and retest the trend line or retest the structure point, I will be going short. I'll be going short. I'll be going bearish again. And if you look at it closely, you find out how price. Now, this thing is not a coincidence, okay? Those of you that trade other strategies might think this is a coincidence. No problem. Like we have a touch here, we have a touch here, and then we had a choppy movement here, but this is also a break and a retest for me. And then you can notice how we had a touch down here. Let me highlight that as well. Don't worry, we're going to take all of these out. We had a touch down here. Sorry. We had a touch here. We had a touch here. And then we had a break and a retest right here. Remember, a trend line, you only need what? 2 points to draw a trend line. So, guys, so looking at the 30 minutes time frame, I saw this interesting move right here, this interesting bullish move, and then we came all the way down, started rejecting the downside. This was exactly where this my long position tool was initially. And as soon as I saw this bullish move right here, I started getting it at exactly 0.66904. That was my first entry. So as I started getting it, and I started seeing some reactions and all of that. Now, how you could have managed this trade properly? Our initial stop loss was somewhere around 24 pips, which is nice, which is 24.2 pips, which is very, very nice. Now, my target was 50 pips. 50 pips. Why? Because that's a very decent 1:2. That would have been a very decent 1:2. Now, if I had gotten at the time I got the 50 pips, I moved my stop loss to break even. Now, what could you have done better? This is a very, very clean highs that I felt was raided. This highs up here was raided, was taken out. they triggered all the buy positions that were resting above it, all those buy stops. You must have heard of buy stops, buy stops, buy stops. They literally triggered all of it, and immediately they reversed the market down. So I feel like there is a need to push the market all the way up, if not to the main highs, at least to a significant levels of resistance. Now, I'm very big with round numbers. I'm very, very, very big with round numbers. Numbers like 0.6750 is a number that I don't joke with. So my take profit, I remember I said, guys, that 50 pips was what was my initial target. So my take profit was set at zero. My initial take profit for TP1 was set at 0.6740. This was my take profit. This very line I share. Let me highlight that properly. So this very line was my take profit. And as soon as that was triggered, guys, as soon as that was triggered, my take profit was triggered. I wanted to see if price was going to break 0.6750. So I had my stop loss set above my sorry, I had my stop loss set above my entry for the remaining trades, because the reason is because I was actually anticipating that okay, price could potentially continue to the upside just like that. But that did not happen. As soon as we saw this, we saw the next candle same size with what the next candle was same size with the bullish candle. The bearish candle was same size with the bullish candle. That is called a tweezer top. So this tweezer top was formed on the 30 minutes time frame. I saw it. I was looking at it at that time. It was around, I think, 8 a.m. thereabout. It was in the morning, actually, if I can really remember. Let's see the time. So that was exactly 8 a.m. So seeing this, I was like, okay. Now this market could potentially turn. As soon as I saw the moving average cross over right here, I was like, okay, this market is going all the way down. But I did not enter the trade. Okay, I wanted to see a break of one of these counter trend lines, so I left it. So the break actually came somewhere around in the night, and there was a retest, like you can see right here. At the point you see this moving average crossing back to the downside, and then you see this Marabuzo candle, should have been the point where you could have gotten out of this trade. Why? This is a resistance up here, guys. It's as simple as that. This is a resistance up here. So as soon as you see this candles pattern forming right here, get out of the trade, take your profit and move on to the next one. Why? Because now some of you would think it will temper with your risk to reward ratio or something. You wanted to get a 1:6, 1:7. Because I think this trade initially was a 1:6. But now I had the opportunity to see this around 8 a.m. in the morning, which is actually the time where I do analysis and look at the chart. Now I have had opportunities to see this. The best thing to do is to get out of this trade and position myself for a different market. So this is the critique, guys. Some of us, we are bent on my analysis. The thing about successful traders is that successful traders, they don't try to call out the market in a way. They don't try to predict. They just analyze. They just do technical analysis. And which means that if the market tells them that, hey, yo, I'm switching to the downside, they follow suit. If the market says, I'm going to the upside, they follow suit. And one thing is also important as a trader is that you should learn to position yourself as a sniper, which means that you shouldn't rush into getting into trades all the time. You should be patient, wait on the sidelines, wait for this setup to come to you, wait for the trade to come to you, guys. I think that's something very important that I need to say. You need to always wait for the trade to come to you. Now, for example, this was a decent breakout. Now you could have waited for the retest. The retest came somewhere around exactly 8 to 9, between 8 and 9 a.m., which is actually the time that the London market opens. So if you were lucky to have seen this move, you would have known that, okay, this market has literally flipped bearish rather, and you would have been able to take your trades, guys. You would have been able to take your trade. So it's as simple as that. And if you measure the move all the way from here to here, that's about 60 pips, 58 pips, which is also a decent amount of pips. Now on the screen here, I'll show you my screenshot of the profit, how I closed out my trades, and you can check out the price. I literally closed at 0.67400. That was where I think I closed some of my positions, guys. So this is the critique for the video, guys. And now for another part, where do I think the guy is headed for the next couple of weeks? Now, I think I can take out these drawings. I think I can take out these drawings since I've shown you guys the important thing now, how you could have traded better on this trade. So let's see if I can take out some of these drawings, guys. All right. You guys, trading is interesting, okay? You don't have to stress yourself over a couple of things. Just do the needful, take the necessary trades. And one thing is also important: execute, 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 execute. Now, if you notice, I have a box run on here. 0.67 is here, 0.67500 is also here. I did not draw my box somewhere around for like a perfect price, which is 0.67500, which is a significant price level. Some of you still think that this thing is a coincidence. It's only ICT that work. Let me leave that, sir. But guys, stick to one strategy. If you are trading ICT, stick to it. This is just my opinion about the market. Now let's go back to the weekly time frame first, because this is the end of the week, and let's see what the last week just did. Beautiful, beautiful, beautiful. This candle for me looks like a shooting star, which is like this kind of candles. A wick to the upside longer than the wick to the downside. Price closing below areas of what support, because this was my initial area of support, guys. Those of you that have been following would have noticed that this was an initial area of support, and we just literally broke above support in a way, but now we closed back below it. And remember, I said that our ultimate target is going to be down here, of which we could also potentially break through. Okay. I started having this bias for sales the moment I saw this bearish engulfing. And if you go back on the YouTube channel or check other videos on this channel, you would see the video where I said, do I believe history to repeat itself just as history did right here? Just as it did right here. Bearish engulfing, the market went all the way down. Bearish engulfing, and now the market is going back down. The same thing, guys, the same concept. Now, where do I think this market is going to push to? Where do I think it's going to put to? Now we have equal highs right here. For this case, I'd rather think that the market is still going to keep pushing into my target, which is at 0.62 75 0.6275, which is down here. Some of you can simply put it at 0.6250, which is a cycle number and an area of interest, guys. Now, why do I think so? Because we've cleared out some significant areas of resistance, and we are still bearish in this market. Now, checking how we've been flowing to the downside, we had push to the downside, we had a push back up, we had a push to the downside, we had a push back up. Now, I would anticipate for this guy to keep pulling. Now, to look for areas of targets, guys, this areas is based on solely technical without applying my fib. But if I decide to apply my fib for this one, I would only see that, okay, we came as deep as 100%, which is sometimes good for price, which is sometimes also not good. Now, for the long run, I would rather want to target this area based on the fibs. We are doing this together, guys. So 0.5940 is a decent area, but I'm going to place my target at 0.6 flat. So 0.66 flat in the coming months, guys. I'm calling this out publicly. I'm calling this out. I'm saying this. It might not be very, very important to you right now because you might not want to hold your trade this long. Okay. And don't forget that trading the market moves in waves. Okay, it moves in waves, so don't forget that as well. So it's going to do something like this, break, okay, just like that, for it's going to eventually its target, guys. So in the long run, I will anticipate for price to reach out for where this area is down there at 0.6 flat, 0.6 flat. So we are at 0.66, which is like a 600 pips move away from current market price. That's my bias for the sell side. But remember, guys, always take profit and pay yourself. When the price gets to 0.6250, I'll take a huge chunk of my profit. 0.60 flat, I'll take a huge chunk of my profit. But if you want to ask, Flourish, did you get in on the sale on Friday? I didn't, guys. I could not get in on the sale because I was not watching the chart at the time. But come Monday, Tuesday, I'm going to look for a decent area for entry. Sorry, I want to do that on a daily. I'm going to look for a decent area of entry, and I'll be going short. Looking at that, we've had these beautiful, beautiful rejections to the downside from where 0.6750. That was a decent rejection from the downside. I would now expect that price can literally pull back into our trend line, like pull back below the trend line, which is very, 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 very nice as well. Retest this 38.2 area, which is also an area of structure, and then we could start to see the market fall all the way down. Now, for swing traders, if you want to take this trade, I'm sorry this video has been quite long. It's important because what we are doing here, we are learning. Now, for swing traders, you want to take this trade on a Monday, stop loss above these highs for a 1 to 2 or 1 to 3. That's a 1 to 2.5, which is also very decent, guys. Now, I would literally anticipate the market to keep falling. And if you want to hold the trade for the season, the whole 600 pips move, that would be a 1 is to 4.5, which is also very, very decent. So I think that will be all for these guys. And to talk about what I'll be trading for next week, you're going to see that in our Forex weekly forecast. And I urge you to be part of that as well in anticipation and Space Forex weekly forecast. And we'll be doing a lot this week. So yeah, guys, that's it for critique for this time around. At this point in time, we are looking at key levels of what support. Price would always want to do this like it has done today. Always remember that it's not going to be a clean structure all the time. At this point in time, we tested it as support. We broke through. We retested it. We tend to go down, luring sellers, luring those guys that want to go short, which is decent. If you are selling here, I expect your stop loss to be above this high. So definitely the price would not have hit your stop loss if you were like above that ice there, and your targets down here, like I've said. So folks, this is that for critic. If you have an opportunity to monitor your trade, it is one thing to take a trade, and also it's another thing to manage your trade. Learn to manage trade, guys. Learn to manage trade. I think on the 4 hours, let me show you these guys before we call it a wrap. I think on the 4 hours, rather, we've had a decent sorry, I'm making mistakes. We've had a decent cross back below of my moving average. Structure has changed, and now we could expect the market to actually come back below these areas of the trend line that I have, since we've broken the counter trend as well, which is very, very beautiful. Very beautiful right now. We've broken the counter trend line. That's decent, decent, decent. We're currently testing it, if you would want to say that. It's here right here. But as soon as we get a breakout of that, it will be very, very nice of you to take a short position somewhere around here. Have your stop loss there for intraday traders, and targets first these areas for 1 to 1.2, and you could start looking for extensions. Okay, Fibonacci from these highs right here to the lows down here. So this could be a potential target. That's a giveaway, guys. That's a giveaway, guys. So this is simply your ABCD pattern. Okay, very simple, guys. That's your ABCD pattern, like always. That's your ABCD pattern, like always. That's A. That's point A right there. This is point B. And this is point C. And we're expecting D right here, guys. So that's it, guys. That's it. ABCD pattern. So if you want any further information or any question, guys, head straight to Consistency FX Telegram. Join the Telegram. We post all of these things there, analysis and all of that. So I'm going to save this right now and send it as well. So you can head straight to the Telegram channel and be part of it, guys. Be part of what is happening there. Be part of what is happening on there. So this ABCD pattern that we're anticipating to play out next week. So folks, until next time, please be sure to subscribe, like and share to others. And yeah, just do all of those things that YouTube demands from us. Like, share, and subscribe. So until next time, folks, may the peace be with you, and I wish you good trading. Let's go. Yep. Get the money.